please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, 1/3%, 1/4% now, so it's just shaving off a little rapidly.
We are looking at further downside of the RUPEE.
We've recovered from the day's low, but nonetheless, the macro concerns continue to weigh for our markets.
Although the rupee has strengthened, you've seen the bond yields continue at 8.21 because there are new worries.
Cabinet approves increasing ethanol prices up by 25%.
2-point change in the Nifty, 11,284 is where we find ourselves at.
Hindustan Unilever up 2%, but the real big support for the market came from Kotak Mahindra Bank and HDFC Bank.
Markets bounce back from lows after announcement of the Prime Minister holding an economic review this Saturday. Nifty and Sensex rally more than 3/4 of a percentage point. Bank stocks underperform.
The rupee also stages a pullback, a big one, along with equities. Lower trade deficit for the month of August adds to the momentum. But bonds recover less due to fears of a rate hike which might be needed to stabilize the currency eventually.
Crude oil prices continue to rise. Brent hovers close to the $80 mark due to concerns over global supply. Shares of oil marketing companies continue to be under pressure.
The Union Cabinet has hiked ethanol prices by up to 25%, providing some relief to the sugar sector. Sugar stocks end higher.
FMCG stocks, that's consumer stocks, make a strong comeback, end the day over 2% in the green after falling nearly 10% for 7 straight days. Well, those were the top 5 headlines from Dalal Street. Hello and welcome to Markets Today Talk Back. This is the show where we tell you all about the 6 hours of trading in just 5 headlines. And today, it was such a seesaw ride. It was such a big U-turn. All that and more coming up for you. I'm Lata Venkatesh and with me, my colleague, Prashant Nair. Hi, Prashant.
Hi, Lata. So good news just before a market holiday tomorrow. But as you said, a big seesaw, but eventual close on the market pretty good. Over the next 30 minutes, we will take you through what mattered in the market today, the big stories. Our guests will take your questions and the Q&A will begin in just a bit. To answer your questions, we have our experts, Ashwini Gujral on the charts, Gaurang Shah on the fundamentals. Gentlemen, thank you very much, both of you, for being with us here on the show. Before we start the Q&A, let's quickly wrap up what really went on in the markets today. The rupee and the Nifty, I mean, in a way, leading and following, but essentially doing the same thing today.
Yes, we didn't have a very great start for any of the 3 markets, not for rupee, not for stocks, not for bonds. And that was because overnight the crude price was a big overhang, and Asian markets too were tepid out of concerns that China would knock the door of the WTO to impose sanctions, something we had already reacted to yesterday. The bond yields went as high as 8.21 because the rupee was as weak as 72.91, both complementing each other. 8.2 seemed very, very attractive anyways, but the recovery didn't come because it was 8.2 or because the rupee was almost 73. It came because there was a bit of a trigger in terms of a buzz that the PM will meet. I mean, this is not, there's no confirmation of the agenda of the meeting. There's no confirmation whether immediately something will be announced. But the very fact that the government is pondering over the economic situation and the Prime Minister will attend that meeting was enough to send all the dollar longs unwinding and all the equity shots coming and covering. You saw a sharp spike in consumption stocks. You know, those are anyway the strongest stocks. So that's where the short positions got covered first. And the laggards were oil refiners and banking stocks. Banks still a spot of bother because they have other things like NPAs and higher interest rates worrying them. But more stock-specific color, Prashant.
One point, market breadth was still quite weak. I mean, almost 2:1 in favor of declines. That, I think, but that's okay because, I mean, large caps were the ones which were correcting and large cap pullback led to what we saw in the Nifty. So this is where the strength was. FMCG, as Lata pointed out, metals and pharmaceuticals, 3 areas where there was quite a bit of strength. Large caps which were higher, there was something like a power grid, there was ITC, there was Sun Pharma, Hindalco, Lever. Lever has corrected almost 12% now in the last 7-8 days. Tata Steel and L&T were the other large cap names which actually ended the day higher. BOB, ICICI Pru, Axis, I mean all financials, and I could go on with more, but you get the idea. And Bank Nifty, I mean, showed the weakness. It did not recover, although the Nifty staged a comeback. Broader pullback was seen in JSPL. I mean, actually, watch out for the steel space when we come back on Friday, because it closed the day's high. GRU Finance was up 3 3/4%. ABB, Nestle, again from the FMCG space. PVR was higher. Consumer name. Amara Raja, GRU, and we had Global Spirits, which came up some 13-14% on pretty large volume. So that's essentially the tenor and tone of the market. Pullback in many areas. Lata.
Okay. Well, with that, let's get to more expert opinion. As we discussed, market sentiment seems to have turned on the back of the news that the Prime Minister will hold an economic review meeting. Let's first ask our colleague Sapna, who had this story for us. Sapna, exactly what are you picking up?
So, well, the sense that we got briefly in the early part of the day was that, yes, an economic review meeting at the Prime Minister's level is likely over the weekend. A high-level meet, no doubt about that. You could see representation from the regulator as well. That was the expectation in the morning, but no confirmation as yet. So we are very clearly given to understand, yes, an economic review meeting is on at the highest level. Also in terms of the options on the table, the fiscal and the monetary options are not being ruled out. Now, obviously at this stage, nobody will come out from the government and say that, okay, these are the fiscal options that we are looking at, or these are the monetary options that may be explored. And this all is very dependent on the unfolding economic situation. For example, we have seen the rupee, a dramatic recovery in the rupee during the day. So if that continues to be the trend, not very sure as to whether any further action or other action from the government and the regulator together will be required or not. But as of now, a very clear indication coming that both fiscal and monetary options are on the table. There is a review meeting that will happen. As and how situation develops, measures, if required, will be announced, and some of them could be immediate in nature. Some could also be work in progress. Okay. This is a sense that we have been given as of now.
All right, Sapna. Thank you very much for joining us. Markets only need a whiff of something constructive. They were anyway ripe for a correction after consecutive falls. But let's ask our guests what they make of markets. Ashwini, first to you. Do you think 4% correction that we saw, the fall that we saw, the worst is behind us now?
It's unlikely that it's over, but you could have a couple of days worth of pullback. I don't think much will happen on Friday, but so in that sense, you can continue to have this pullback even on Friday. Monday, when the result of the meeting, etc., comes in, either there'll be dramatic steps. Often the first time the meetings happen, the steps aren't good enough. So my sense is that you have a couple of days worth of pullback, and then based on what is announced, chances are you could restart the downtrend. But overall, at about 11,250 thereabouts, the market seems to have found support. I think you will have trouble getting past 11,400, 450. Similarly on the banks, I think another couple of 100 points, say to about 27,200 is possible. But again, at those levels, you'll have trouble going forward.
Ashwini, so that is the view, but how do you trade that view? What do you do now?
Well, if you're a long-term investor in this 11,000, 11,200 zone, which is a very, very strong support. The first time we came from 8,000, that's where we stopped. Again, second time around, we found support at those levels. So somewhere in the vicinity of 11,200, chances are the bottom will be formed. So each time you get closer to those zones, as a long-term investor, you should buy, and buy into the same kind of stocks which went up earlier, because everything is corrected 15-20%. If you're a trader, you probably need to wait for Monday. Yes, you could be, Friday sideways to up, but really the big move will start only on Monday once the market knows what is coming. So that way, just a sideways to up kind of pause before we resume our trend.
Okay, Ashwani, so if you're a trader, wait. If you're an investor, closer to 11,200, you should start picking stocks. Well, we move on to the second story today. The rupee recovered more than 60 paisa from the record lows of 72.91 against the USD. This is on back of news that the Prime Minister will hold a high-level meeting to discuss the current economic situation as well as movements in the rupee. We also had a lower August trade deficit, which came in at $17.4 billion, which lent a helping hand. Bonds, although, recovered a lot less. There are fears that a rate hike might eventually be needed to stem the rupee fall. I mean, Lata, let's just put all of this together. With this fall and this recovery, I mean, where do we stand?
It was becoming an easy shot, the rupee, because nobody was lending support, and in the initial days, everyone welcomed the fall. But thereafter, it started looking like a slippery slope. There was a lot of supply of dollars from the Reserve Bank, and still the rupee wasn't recovering. Today, we did begin with negative cues, as I told you, because of crude. And so at one point, 72.91, that was reached pretty quickly, you know, in the first 2 hours of trade. And thereafter, this Prime Minister meeting news, and then some tweets from the Department of Economic Affairs Secretary, all helped. And you know, people who have long dollar positions, and it is giving you 72.9 or 8 or 7, want to book it in a hurry, because you never know, steps could get announced. And so they rapidly unwound their long dollar positions. There are still, of course, worries that, you know, the trade deficit at 17.4 is better than 18.02, but it is not per se a good number. So we will have to wait and see how things pan out. And we must remember that there is a global context which is still very negative, and crude is still very much against us. So, you know, we'll stop the waterfall, that kind of, you know, precipitous falls, but more downsides for the rupee cannot be ruled out.
Okay, so maybe the free fall has been stopped, but we'll see, depending on what comes out of that meeting over the weekend, which will, I guess, decide the next course of action in the currency. Let's move on to the third story of the day. Oil prices continue their up move. I mean, this has essentially been watched closely by both the rupee and stock markets. Brent crude is now hovering close to the $80 a barrel mark. There are concerns over global supply growth being slower than expected, lower spare capacity. Oil marketing companies continue to be under pressure on the back of this. We had IOC, BPCL, HPCL all ending the day over 1% in the red. In fact, we actually spoke with Peter Maguire of XM Australia, who believes that you know, oil is in the throes of a very strong bull market, and he doesn't rule out another quick $4 or so from where we are. Listen in.
I think that the bulls are out, hedge funds are long, and you've got so much uncertainty with moving parts. What's happening with Iran? Where do the weather outages play if those hurricanes start to progress from here? And then what's happening with the US dollar and the uncertainty with trade sanctions moving into China. So you look at the big picture, WTI just about on 70, Brent on 80, and I think it's got to have a $3 or $4 rise from here over the next couple of, maybe another week or so.
Okay, thanks a lot for those views, Peter Maguire. We spoke to him, of course, earlier today. Now we get some questions going. Mahesh has written to us from Hyderabad. He has 250 shares of GAIL purchased at 432 rupees, has been holding them for 6 months, and is a medium-term investor. Should he hold or sell? He hasn't given us his definition of medium-term, but Gaurang, what would you advise him?
Thanks for that, Lata, and good evening to all of you all. You know, Lata, it always makes sense when you're investing in capital goods engineering or exploration related companies or mining related companies to have a longer term time duration, because that effectively has a sizable impact on the earnings, because these are all long gestation you know, companies. So we do have a positive view from a long term point of view on GAIL. So if the investor can translate this medium-term view to a long-term, and by long-term definition is at least 2.5, 3 year plus, and I think there is meaningful gains to be made. Not to forget, the Honorable Minister for Oil, Mr. Dharmendra Pradhan, had very recently, you know, given out a revised guideline as far as the NELP is concerned, and exploration in the northeastern part of India is likely to pick up steam. That's where companies like GAIL, ONGC, Oil India, or even L&T, which are into hydrocarbon business, will tend to benefit. But these are all long-term investment ideas.
Fair point. Let's get a quick word from Ashwini as well on GAIL. Ashwini?
In general, the biggest underperformers in the market are the PSU stocks, because the motivation of these companies may or may not be profits, etc. So that way the best management quality is often not there, and as you can see that unless you buy them or time them very well, GAIL in that case should be bought around 330. 432 is a long way off, plus crude prices are high, unlikely they get any benefits. So my sense is he is much better off moving on, and the most recent sector which is in an uptrend is the pharma space. He can look to buy pharma stocks like Biocon, Oro Pharma, etc. and out there he'll get much better returns. Also, since we spoke about consumer, things like Bajaj Finance, Bata, Kotak, these kind of stocks should be preferable.
Okay, Ashwini, thanks very much for that. We take a very quick break here, the first on the show. We come back, we sort of continue the Q&A session. We're leaving you with some market opinion that we got from Manish Sontalia of Motilal Oswal. He believes that it's a good opportunity for long-term investors. We also spoke with Mark Matthews as Julius Baer with his perspective. Listen in, we are back in just a jiffy.
The amount of fall that you're seeing in the mid and the small caps is more a case of panic setting in retail HNI investors, and we know that the fundamentals are quite supportive of the valuations even at these levels, or maybe even at lower levels. I would tend to believe that if you're slightly longish term investors, these are great levels to buy.
In the bond market in India, I would be a buyer even of rupee bonds. I think the interest rates are high enough. I think there isn't anything really wrong with India apart from the fact that it's running this external deficit.
I've been taking your questions and giving you answers. We are done with 3 of the top 5 stories. Here's the 4th one. The Union Cabinet today has increased or decided to increase ethanol prices by up to 25%, providing some relief to the sugar sector. The price increase will help sugar mills divert cane juice for ethanol production. Sugar stocks like Sri Renuka, Dhampur Sugar, Balrampur Chini ended the day higher. It was a late reaction, but it was a strong reaction by the end of it, between 5 and 12%, as you can see on your screens. Manisha Gupta is joining in. She's been tracking the developments. She's been speaking with managements. Manisha, what are you picking up? How significant is this going to be?
Well, this clearly has been a cheerleader when you look at the cabinet decisions, because we have seen good amount of price increase coming in, as the government had been promising up to 25% of an increase. So whether you look at the C-heavy molasses, the B-heavy molasses, and if you are looking at ethanol production from pure sugarcane juice, 59.19 is the price that the government has come out with per litre. Now, this is very timely because, one, there is surplus sugar into the country for a 3rd straight year, and we perhaps are looking at a record sugar production for the next year as well. Ethanol blending has picked up. We are more than 5% on that. 10% is what the government is looking at. And with this pricing that we're looking at, the expectation is that you will see the sugar industry actually take use of this. Another important thing is that with the petrol diesel prices looking at where they are, ethanol blending perhaps comes at a positive time. It, of course, will take 1 to 2 years before you put in more investment coming in, more distilleries being put up by the sugar companies. But this definitely is a very strong, good step in the right direction. And we clearly have seen the sugar stocks cheer that.
Okay. We have some questions on one of the sugar stocks, Dhampur Sugar. H.S. Negi has sent us this question on Dhampur. He says he has 1150 shares purchased at 112 rupees. He has been holding them since 15 months. Should he hold or sell? Okay. Do you track Dhampur, Gaurang?
Well, Lata, not Dhampur, but there is only one stock in the sugar sector that we cover, and that is Balrampur Chini. And the news that was out this afternoon as far as the ethanol story is concerned, I think it's going to take a long while for the sugar companies to actually reap in the benefits. And more importantly, they will need capital investment. And on the flip side, you will have OMCs who will also need capital investment, because as of now, there is capacity, but the capacity is, if I'm not mistaken, a low single digit as far as blending of ethanol is concerned. So yes, the government is doing the right moves, but unfortunately the ground level reality to trick in terms of earning visibility will be much longer.
Okay.
Ashwini, what's your sense? Dhampur sugar and the sugar sector?
Well, it does appear that something has happened in sugar, and Dhampur has been in this range of 75 to 95 for a while, more than 6 months. So any sort of rally on Dhampur should be able to reach 140. But unless you are really clued into this sector, this is not a sector for retailers to be messing around. So maybe he's lucky this time, his price is not too far from here, but he may not be lucky all the time. So my sense is he'll get about 140 if this rally picks up. Have a stop, say, closer to 85.
Okay, thanks a lot for that, Ashwini. I mean, I take your point entirely. I'm just looking at the year-to-date changes, and almost all of them have fallen about 50%, barring, very, very few stocks, and where the fall is, 20%. So not really yet a sugar year, and you have to catch the bottom of the cycle or you are finished. Last headline of the day, FMCG stocks made a strong comeback. Nifty FMCG index was the top sectoral gainer, ending the day over 2% in the green, led by heavyweights like HUL, DHAMPUR and ITC. This rebound came after stocks fell nearly 10% for 7 straight sessions. So we have a question.
Yeah, Janga Reddy has written in with a question on HUL. He wants to know what's the right time to buy 170 shares of the company. And to boot, he's a long-term investor. Gaurang, lever at these prices?
Well, I would definitely vote for that, Prashant, and I stand to be corrected if I'm wrong. Somewhere in Jan 2018, I think the stock of HUL was trading at around about 1,000, 1,100 or thereabouts. From there to 1,600 plus level, I think it's quite a rally, and that's because of the volume, double-digit volume growth that we've had on this financial first quarter numbers that we saw from HUL. And the commentary from the management was absolutely robust. And we believe that consumption, FMCG sector is going to see fantastic growth recovery, especially on fallback of demand from semi-urban and rural India.
Okay. Ashwini, you have some thoughts on HUL as well?
Obviously, stocks down more than 15%, and maybe another 3-4% can happen, but it is a buy right now. The 200-day moving average is 1,500, so you are within $100 of the 200-day moving average, and the risk reward is extremely favorable. Once it starts moving, I think next target here could be upwards of 2,000.
Oh wow. Oh, wow, that's another 25%. Well, here's some more news that we reported earlier this week. It's gotten confirmed now. The HDFC Life board has formally appointed Vibha Padalkar, its former CFO, as the new MD and CEO, and she gets a tenure of 3 years. As I said, she's currently ED and CFO of the company. The top management churn is a fallout of the current CEO, Amitabh Chaudhary, resigning to join as the CEO of Axis Bank. And with that, let's thank Ashwini and Gaurang and all of you for watching this edition of Markets Today Talk Back. Have a wonderful